How's everyone doing? Welcome back to the House of Business Podcast 2.0. This is your host, Caleb Thompson, and I hope everyone's having a great day out there today. We're coming live from New York City. Give you the proper introduction. This is the House of Business Podcast 2.0, and this is the place where we give you the knowledge and the tools to execute your dreams and your visions. Man, I hope everyone's having a great day. As I said before, man, we're going to jump right into it. Man, today we're going to be talking about infinite banking. Building wealth through whole life insurance. So a lot of people think that life insurance is just, you pay a premium and once you die, your children, get the death benefit. They get the money. But I'm going to teach you how to become your own bank outside of getting loans, outside of, any other way that you have to deal with your traditional bank. And you can become your own bank. Now, there's two ways to do this. We're going to specifically talk about whole life insurance and how to leverage whole life insurance in order to become your own bank. But there's another way by using a trust fund. So using the trust fund is another way that you can become your own bank. But we may do that another time where we talk about a trust fund, talk about owning a holding company and other businesses that you have. So before we get started, I want to help you to understand something. Before you can use this strategy of becoming your own bank by using whole life insurance, you need to have a investment plan. Now, with whole life insurance, there is a avenue where you can get 4% annually return on investment from your whole life insurance policy. So some mutual, so you have like New York Life, which is one. You have Northwestern Mutual, which is one. So these mutual funds that offer life insurance, what they do is, you pay a premium. And first they do an analysis, or they document exactly like, who you are, your lifestyle, age, and things like that, so they can tailor a life insurance policy according to who you are, the demographics and psychographics of a person. So, and then once they come up with that, then they come up with a premium, and you pay that premium, and it goes on from there. But what we're going to talk about is first, is infinite banking through whole life insurance. But this is something that's kind of bothered me that I have to help you to understand. You need to have a plan, an investment plan. Now, there is an investment plan that is integrated into this whole life insurance policy dealing with your mutual fund that you're going to deal with. So they take some of your finances, and they invest those premiums into different stocks, bonds, and things of that sort, and then they give you a 4%, 5%, maybe even 6%, may go all the way up to 10%, just depending on the way that they invest. They strategically invest those funds. But I think you have a guaranteed 4% return on investment with your whole life insurance policy. But we want to talk about how to create your own bank through whole life insurance, and this is called infinite banking. And then next week, I think we're going to talk about how to do infinite banking, or how to utilize using trust fund through using a trust fund. But we'll talk about whole life insurance now. So this is something that I've learned, that through a properly structured whole life insurance policy, you can build cash value that you can control. And you guys can do the same thing. So what happens is, so once you get a whole life insurance policy, you will pay a premium. Just say the premium is, I believe it's either monthly, every quarter, or every year, annually. So when you pay with $10,000 premium, within that first year, you'll be able to have a cash value of I think 60%. So in between 40 and 60%. So within the first year of you having a policy, just say you put down $10,000, within that first year, you'll be able to access 60% of that $10,000. So you will be able to have at least $6,000 in cash value that you can pull out and take for investment. So and if you never pay it back, the remainder of that upon your death will go to your children. But you should be able to pull out between 40 and 60% within the first year. So I get a whole life insurance policy. They understand the psychographics of who I am, my age, my habits, things of that sort, and they create me a tailored a whole life insurance policy according to who I am, my age, my lifestyle habits, and they come up with a premium. So I pay this premium, which is probably be around $10,000 per year annually. And with that premium, within the first year, I have a cash value. I'm still able to access at least $6,000 of that premium. So there's still $4,000 of the death benefit. So if something happens, it's still my money. The kids will still get the remainder. But this is what I'm saying. This is how you become your own bank, is by, you put in $10,000, you access 6,000 of those dollars, and you take it and you invest those 6,000. People will say, well, why won't I just, instead of just me get a whole life insurance policy and just, why don't I just, take $10,000 annually and just go invest on my own that way? Because, you don't have you can't, unless you use the trust fund strategy, you're still going to need some type of structure that you can pass down to your kids to create generational wealth. See, I can take my $10,000 and I can just go create all these companies and these businesses, or just go invest in some small franchise, and it starts to scale, and come up with a marketing strategy, come up with a target market. Usually franchise businesses already have a target market, so you can't really modify that, So if you go into a Dairy Queen, you go into franchise in Dairy Queen, they already have a target market. All those things have already been mapped out. But just say anything else. A small tech company, you want to kind of modify the target market in the area that you live in. Okay, that's cool. But why won't I just take my $10,000 and go and invest? It's because that even while you pay $10,000 for a whole life insurance policy, and that's the premium, you're still able to access 60% of the cash value of, you have $6,000 that you can take out, while the remaining $4,000 is still drawing interest annually every year by in between 4% and 10%. So it's just like having your own bank. You have that the remainder of that cash value, which will ultimately be the death benefit that will pass along to your children, still gaining 4% return on investment to 10%, depending on how that mutual fund strategically invests their finances through these premiums. So you can still take that money. So this is how you become your own bank. I could take out $6,000. I could go and invest it. Maybe use $1,000 to access a $100,000 account from a prop firm, you know what I mean? So I can day trade. You can day trade. There's many ways to access capital where you don't have to use your own capital. But I could take $1,000, so really $500. Let's say $1,000. I can do a small test with a prop firm, and I can access $100,000 account to trade a prop firm's money. So I don't have to have it. I can have $200 and access a $250,000 account to do day trading on just for free. And once I win, or once I make those earnings, they may keep 10%, but I make $8,000. I make $8,000. They may keep $1,500, and I'll keep the remainder, because I paid $200 to access a $250,000 prop firm account. Then they would give me the money to trade their money if I'm a good day trader. So that's one way that you can take $1,000. You can access a $250,000 account if you know how to day trade, if you know about market structure, if you know how to create finances through day trading. I think day trading is probably the number one skill set that everyone needs to learn. Besides emotional intelligence, that people always say, why you talk about emotional patience? It's going to take some patience, but all those things are wrapped up in day trading. You have to be patient. You have to be strategic. You have to be consistent. And I believe that day trading is like, let's say, it's like financial karate. You know what I mean? You have to be disciplined. You have to be patient. You have to know how to strike, how to scalp. You have to come up with different strategies. It is like the art of war of the financial world. It is like financial karate, jiu-jitsu. You know what I mean? You have to have balance. So that's why I think that day trading is a good skill set. But back to this. So you can take 6,000 of those dollars. You can find something that you like to do, or something that can yield high caliber return on investment. But the remainder of that $4,000 that's still sitting in the whole life insurance policy is still gaining 4% on that death benefit or on that remainder of that cash. So you can either put that money back or you can pay next year's premium. You don't have to pay the money back, but just know that it comes out of your death benefit, so you will pay yourself back eventually. But as I fund my policy consistently, you have to fund your policy consistently or it will relapse. But it grows a cash revenue like we just discussed. It grows a cash revenue that you can borrow against without ever going through traditional banks. So this is how you become your own bank. So it grows a cash value. So as soon as you put $10,000 in with that premium whole life insurance, you can still have a trust fund, and then that life insurance policy, the beneficiary can be the trust fund. So there's many ways to create generational wealth through whole life insurance, also by using the trust fund, and other ways, and also through we'll keep the real estate out of it for now. Let's just focus on the whole life insurance. It's plenty of ways and plenty of avenues, but we're just going to focus on whole life insurance. But you won't have to go to traditional banks. The premium that you put in, it starts to accumulate a cash value within, like I said, within that first year. You should be able to access 40 to 60% of that cash value that you can take out, and you can find different strategic ways that you can invest that you can get a good ROI. But you're not replacing banks overnight. This is not what we're talking about doing, but you are creating your own system alongside the banks. So you are creating your own system, your own family bank through using whole life insurance, and that you can, man, it's so many ways. It's my mind thinks crazy, but it's so many topics that I could split this off into, and that we could talk about investment. But I want to stick to the subject. So we're talking about infinite banking. You know what I mean? Infinite banking. I'm gonna give you 3 talk points here. Number 1, we just went over whole life insurance. It helps to create your own bank, and there's different types of life insurance as well. There's universal life insurance, there's term life insurance, there's whole life insurance. And I really don't have the time to go throughout all. And then there's marinas life insurance. That's like if you are an artist, or let's say you have equipment and you sell your paintings online, and you have to ship your paintings. There's marina life insurance to cover if anything happens to those paintings. So there's different types of insurance, not life insurance, but there's different types of insurance to cover. Probably there's home insurance, there's car insurance, but there are different types of insurance to cover certain things. And then there's I forgot what it was called, but it's to cover just specific types of things, just for fire hazards or flooding. So a specific type of insurance that's tailored to that, which you can pick what areas of that insurance covers pertaining to your life, your home, your land, whatever it is. But number 2, I access and use my cash value strategically. And this is what we were just talking about. We was talking about finding out ways before you get a whole life insurance policy, before you get a trust fund, before you do anything that has to do with money, you need to have a plan. You need to come up with a plan. And it all starts with what you want. You have to, let's go all the way down to the bottom. Let's go back to the core of everything. Before you just come up with some crazy plan and say, I'm going to be the president of the United States. No, it's not what we're saying here. But what I'm saying is, you will not be able to come up with a plan that's accurate and that's in alignment with your capacity and your capability to achieve it if you do not know yourself. Stop trying to compete with everyone else. Stop trying to I always say this, stop trying to out Steve Jobs. Stop trying to be somebody else. You need to find out exactly who you are, what you like, what you dislike. You need to find out your own boundaries. You need to find out what you're able to discipline yourself in. You don't need to own a liquor store if you're an alcoholic. You might have the money, but you need to really, you know what I mean? If you like to drink alcohol, you may need to open a cigar shop. If you don't smoke, you may need to open up, now I'm not saying, but may need to open up a clothing store. You need to find out exactly what your strengths are, what your weaknesses are, can't get high on your own supply. So you know what I mean. If you if you're a clothing freak, you know what I mean, and you running a clothing store and you're wearing everything that you say I'm just advertising. No, you know what I mean. You're getting high on your own supply. You're drinking up all your own products. So if you don't get into a business that you feel like that is you can use as some type of, I hate to say it like this, something that, I hate to use the word addiction, but but something that is going to be a weakness and stopping your company from scaling from a seed A to a seed B to a seed C structure. So you can really damage yourself and damage your dreams and your hopes. But it all first starts, now we're getting back to it, we're talking about using whole life insurance, infinite banking, and how to use that to create generational wealth. But first we want to start off at the core of things. I can come up with some elaborate, I was about to say elaborate scheme, but I will come up with some elaborate plan on, and that something just came up. I'll do that later. Well, but I can come up with some elaborate plan to accomplish. But the thing is this: the plan is not going to work if it's outside of your capacity. And what I mean by that is that, and capacity doesn't mean that you're the hardest worker. Capacity means there's a mental capacity that basically says that this is how you measure your capacity for something that you want to do. Let's start there, man. We have to go all the way back before we even get to the point of life insurance. But you need to have a strategic plan on what you're going to do. You can put $10,000 and access this cash value, but once you access the cash value and take out $6,000 and you just go buy a car, that's a liability. You need to find a way to flip that cash while you still have the remainder gaining interest, 4% to 6%, all the way up to 10%. Just depends on the banks and how they invest. Some of the banks invest in real estate. They try to get their clients to invest in real estate as well, and that is also a compliance issue as well. So just say me, if I'm working with a mutual fund and if I'm working with them but I own real estate, I won't be able to work with them on certain things depending on what type of real estate you own, if you are not a partner with them from B2B, like business to business. But if you're a B2C or you are an employee or things like that, there's a compliance issue with that. But anyway, but we want to talk about you need to first figure out yourself. Yeah, you can have infinite banking, you can create generational wealth, you can start to have a trust fund, you can even have the money necessary to do all these things. And then sometimes, some people, you still need to figure out exactly who you are first, man. And how do you figure out your capacity for something? Is your passion for it? You need to figure out your passion, what you like. It's too many people, cookie cutter people, they like what someone else likes just because that person likes it. No, you need to figure out, don't say your favorite color is blue, and now I'm just talking in layman terms. Don't say your favorite color is blue because your mom's favorite color is blue. You know what? I like that too. We have the favorite color. Oh, Twinkies. We're not doing that. What we're doing is we are trying to cultivate individuality and authenticity and walk in that despite what anyone thinks. There's a lot of people that's scared to be their authentic self because they're scared of what their brother is going to say. They don't want to be their authentic self, because they're scared what their coworkers are going to say. I do not care. You need to get to a point when you are trying to create wealth, when you are trying to get to the next level in life, when you are trying to do things that your bloodline hasn't seen. Your first and most treacherous enemies are going to be those of your household. It's going to be your hating auntie. It's going to be your hating mother. It's going to be your hating father. It's going to be people that's trying to bring you down and trying to keep you at a point where they're comfortable at. Just think of someone who's never really had dreams or really accomplished anything in life, and then it gets to a point when they say, man, I've reached 25 years old or 30 years old, man, and I don't believe that the life is just for me to work, retire, and freaking die. And have kids, and I don't believe that my life should end like that. So they come up with this epiphany and says that, man, I'm just not going to die like this. So they come up with a plan to break out of that everyday norm, and they start to move forward in life. That makes the people who think they know you uncomfortable. You know why? Because if they know you, they can silently sabotage you and they can silently control you without you even noticing. You know, there's some parents that don't live through their children, but they just don't want their children to be free outside of them. Silently sabotaging them, creating doubt because they're doubtful. They didn't do what they wanted to do with their life, so they want to, guilt trip their children. Yeah, and these things happen, but let's not go too far into that. That's for another episode, but that's true. So I want you to understand this. So before you talk about whole life insurance, before you talk about finances, before you talk about this and that, if you really want to build long-lasting generational wealth that's built on something that you can pass down to your children, that you can pass down with a sense of pride, you really need to understand exactly who you are, what you like, what you dislike. You don't have to work. Let me put it like this. You can go and get I'm gonna just put you on some hacks. If you like cleaning, there are apps out there where you don't have to go out and build the whole company from scratch. I might build a company. Once I build a company, I build a company using, I'll create a logo and put in the paperwork to get a trademark. I'll create a business plan that will outline exactly what we want to do, long-term goals, short-term goals, long-term goals. I'll create a target market strategy, exactly who are we going to target. Are we going to target residential properties, or are we going to target commercial properties for the cleaning company, or are we going to target just single family homes? What are we going to do, and what are some avenues or some outsources that we can use so we won't have to every day send out proposals and emails to business every day trying to land our first contract? There are people that are selling contracts for these businesses. So we started Big Apple Landscaping Services, but we use Lawn Starter Pros. They were already there as an outlet. They subcontract out their jobs. People go to them. So if you have a weed eater and a small lawnmower that you can put in your apartment, you can make over $500 a day just cutting grass around the 5-mile radius of where you live. So, you know what I mean? So there's ways that you can create companies and still use other people's OPP. You down with OPP? That means other people's platforms. Using other people's platforms, and other people have already put in the hard work. And what they do is they may get $200 for a job, and they may sell the job out to you for $110. Keep the $80. You know what I mean? Things like that. So you don't have to really it's so easy to be successful. You just got to put the work in. I've seen an old lady, I think her name was like TikTok Mama. TikTok Mama or something like that, man. Just simple things that people feel like, man, I've already retired. I've raised my kids, they're out of the house. Fell in love, made one video on TikTok, not went viral, but just, and started to just continue to play with it and ended up going viral. Just thinking, how do you go from raising an entire family, sending your kids off to college, you're sitting at home, your husband probably passes away. Now, I don't know if this happens to her, and you're just like sitting there and you just feel like, man, what's life to live? Just picking up something new and end up going viral and put the spark into your life and send your life in a whole different trajectory. If the only thing that you are looking for is for things to go wrong, that's what's going to happen. That's what's going to happen. You know what I mean? People say, man, you have so many people that want to stop other people from accomplishing what they want to accomplish, when the people who are doing these things have their whole life ahead of them, but they can't see it because they're trying to drive a car forward by looking in the rearview mirror. You're looking behind you. You're sitting with this person, and that's why you're always crashing. That's why you can never come up. That's why you can never do the things you want to do, because you're worried about what this celebrity does. Now you like it. You're worried about what this your cousin did, how she did her hair, and now you like it. Start to get to a point where you say, you know what, I'm going to figure out exactly what I like, what I want to do with my life, how I want to do it, and then I'll need to put the work in on finding out how to accomplish it. You don't have to. Once I figured out, man, there's a lot of successful people that's in my family to a certain degree. I have a sister that's basically, I don't know the word for it, some type of a doctor. I have a brother that is E5 staff sergeant, came out, created a company, served in the military. I have a brother that's a homicide detective. I have another brother that works on airplanes for the military, that works with the Boeings for the military, paints military planes. I have another brother that's, I have a lot of people in my family that do well, but this is the thing. even with all that and all those, major accomplishments, they still work for someone. They still work for someone. They never had an entrepreneur mindset to the point where they're saying that, let me go and figure out exactly how to create generational wealth and bring this knowledge and this wisdom back to the family, so we won't have to ask this brother this week or swap, or let me borrow $5,000 or let me borrow $10,000. Now I've never received any money from my family, especially of that caliber, of that amount. Everything I've done, I built from the ground up with the help of God. But what I am saying is this: nobody, even with these great careers, you have to get to a point where you have to learn about investing. You have to learn about sharing that knowledge with your family. So, it was a lot of individuals like the elders that are in my family. What they do is they have the wealth, they probably have knowledge, they have the connections, and what they do is they don't share those things because it gives them a sense of power over the family. So they don't want to share about infinite banking. They don't want to share about how to use whole life policies, whole life insurance policies. They don't want to share the information about, how to use trust funds as a way of infinite banking, and how to, use hedge funds. And they don't want to share that information. They want to hoard the money, and they want everybody to come and ask and beg. So it gives them a sense of power. That is not how you treat your family. Once you take the stairs so everyone else can take the elevator. That's how it's supposed to be. Now, I'm not saying everyone riding your back, but it all starts first with exactly what you want to do, how you want to do it, figuring out what you like, what you're passionate about, and then once you come up with the plan, I don't care if it's baking cookies. There is a law. I believe the law is HB 1028, which is a homemaker's food law. Now, this may be different than the state of Oklahoma. It's different than the state of New York, but HB 1028 or 2018B or something like that. I can't remember. I haven't looked it up in so long. But with this law, you are able to make up to $70,000 without filing for an LLC, without filing for a sole proprietorship. You are able to sell baked goods or canned goods out of your home and make up to $70,000 with no taxes. You don't have to pay no taxes. You can go and get the stickers. You can go and get the cookie sheets. You can go and get all those things, and you can make money out of your house for free without taxes. By selling cakes and cookies and canned goods or whatever you sell, jam out of your house. You know what I mean? So you can do that. So something that you will see every day is just like something cool you would like to do, maybe like baking, maybe like doing other things. But you can, and once you turn it to an LLC, just think that you turn it to an LLC, you're going to have to at least get a small kitchen or a ghost kitchen so that the health department can approve it. But you can still get a tax write-off on your home if you're saying that your home is where you make the orders. Your home can be a tax write-off as an office. So yeah, I have a house. I have an apartment, but the apartment is I do most of my work here, so the apartment is a tax write-off. So all the rent that I pay in this place, all the light bills and all that is a tax write-off. I get it right back. So you know what I mean? Because I work basically from home. So even though I have another office in Manhattan that I share with the group, this is a write-off. You know what I'm saying? So it's a write-off. But anyways, figure out exactly what you want to do and how you want to do it. But once that policy builds cash value, you can take out a loan against it and then just go into finding some opportunities, investments to fund. So do that. Like I said, man, my top 3 investments is I encourage everyone to learn how to day trade. Like I said, you take $10,000, take $6,000 out, use at least $800 to access a $100,000 or $250,000 day trading account through a prop firm. And so you'll spend $1,000 just to be able to have access to $250,000. You will be trading someone else's money, but all of the wins that you make, or all the money that you make, you will keep a large percentage of it, from 80 to 90%. So, and that also gives you rapport with that prop firm, and they'll be able to access larger amounts of capital. So with the larger amounts of capital, you're able to day trade with larger accounts. I know a guy that took out a $2 million loan. He really didn't need it, but he just took out a $2 million loan. He had good credit. He took $1 million of that and bought over, let's say, that you find the highest stock that you could probably find, and bought probably 5,000 contracts. He bought like 5,000 contracts at $6,000 a piece. And what he did was he day traded that and made all his money back. Made the whole $2 million back. I think it was probably like $8,000 a contract. But he bought maybe 10,000 contracts. But he day traded $1 million and made all of his money back and just paid the loan back. You know what I mean? But you have access to different types of things. So day trading is one outlet. And I always tell people this as well. Another way to go into investing, if you want to go into real estate, but you don't really have the money to get a property, or you don't really have the time to try to send business proposals out to Airbnb someone else's property. So another thing that you can do is go into tax lien and tax deed investing. It's very easy. I call it the back gate to real estate. So the back gate to real estate is tax lien and tax deed investing. What you can do with that is there is a tax commissioner or the county commissioner of your town or of the city that you live in, and what you'll do is you will call them. You will ask them, okay, when is the next tax lien or tax deed auction, bid or sale? And what they do is you go and you register online for a bid. So you basically just bid on these houses that people then pay their taxes on their property. You can find a $250,000 property, especially here in New York City or around New Jersey, around the Hoboken area. They $250,000 property, $500,000 property. They didn't pay their taxes on it for the last 2 years. The taxes is probably $9,000. You know what I'm saying? So you go and you pay the $9,000, or you pay, some of it is lower, $1,200. You pay the tax, you get the tax lien. If they don't pay the taxes on that $500,000 property, you go in, exchange that tax lien for the tax deed of that property, and you now own a $500,000 property for $1,200 in late tax fees that they didn't sell. But if they do pay their property tax, if they do pay their property tax, you still will receive 18 to 24% on that tax lien. So the longer that you wait, and sometimes they have a period, sometimes these tax liens have up to 2 years before you can cash them in to get the tax deed to that property. They give them a grace period of probably 2 years. But while you're sitting on that tax lien for that property, you are still gaining 18% annually. We're talking about whole life insurance through a mutual fund or a mutual fund partner, and you only gain 4%, 4% annually. It depends, 4 to 10%. But with tax lien investing, you call your tax commissioner, you ask them, when's the next tax lien sale? Is it going to be cash? Can I register online? Is it, where exactly do you guys meet? You get all that information, and then they'll tell you if it's cash only, or you can pay to register online. You can register for free. You got to register in person down at the tax office, the tax commissioner's office, or whoever, the district courthouse, wherever it is. But you go and register for the sale. They will send a list of the properties with the address. Some of them don't have addresses, and some of them do. So they'll send you a list of properties within the county of everything that is up for bid. And what you would do is you would go and you would say, okay, I want these two properties. These properties right here are $50. I don't know exactly what it is, but I'll take the tax lien for this property that's $50 late on tax fees, and this one that's $90. So you can go into real estate with $50. You find the right property. There was a guy that spent $60. Guy didn't pay his property tax, and it was a small like playground, and the other one was a funeral home. So it was a funeral home, and so now he said it was a funeral home. So now he rents that out, or he sells it to some funeral company or whatever. But it brings in over $6,000 every month. Just from $90. You know what I mean? So tax lien. So number one is when you want to invest, when you take the money out of the cash value out of your whole life insurance policy. My 3 ways to invest that I would go with is probably learning how to day trade, taking a percentage of that money to access a $250,000 account to day trade on. Number 2 is go into tax lien or tax deed investing. And number 3 is, if you're really just not a business owner, but you would like to go into business, is look into franchise offers that has to do with business. They already have, if I buy McDonald's right now, the McDonald's already has operational structures. I don't have to go in, figure out, write up a procedure or a operational system on how to cook a burger and how to pour the drinks and how to find a manufacturer or, appoint a procurement officer and all these things. They have all that stuff already. So that's what franchises do. Franchises have everything that you will ever need, and what you do is you basically purchase that business as is, and you may just have to keep up with like the sales, the promos, and things of that sort. So you will be in contact with corporate for that business just to keep up with those things, but you do not have to build the business from scratch. So number 3 is, I would say, go into franchising companies if you're a business owner. There's a difference between being a business owner and being an entrepreneur. But those are my 3 top to go into investing. There's other ways as well. You may listen to someone else and they may have something better. So, but these are just my top 3. So anyways, the difference is your money is still growing inside the policy while you're using it. And that's what we were just talking about. The remainder of the money of that will ultimately be the death benefit. You take out the 60% or $6,000, there's still $4,000 left inside of the policy. That money will continue to grow while you are still utilizing the rest of the money. So, I make sure also that I repay myself over time, which keeps the system working and compounding. So you have to pay yourself as well. Don't just invest all the money, but you can put your money in a place, take it out, and it's like you've been in your own bank. Number 3, I build long-term wealth systems, not just a quick fix. So I realized that this strategy requires patience and consistency, and you have to think long term. You cannot just think, I'm going to take this money out and blow it. I'm going to buy a car and buy this and buy that. You need to find some kind of way to invest it, and once you make that money back, then you can celebrate. You go and buy yourself a car, you go and buy yourself an extra property, but find some kind of avenue or something that you like to do where you can, like they say, flip your money. Flip your money, buy a fixer-up house, turn it into an Airbnb, or this. You want to make your money back, you want to make your money back quick. I just thought of this. So this is something that you can do. You can buy a fixer-up house, fix the house up, and turn it into not a wellness center, but into kind of like a halfway house. It's more like a shared home where individuals that's probably disabled. You can just start a house for veterans. The government is going to fund that. You're going to make up to probably $100,000 in government grants. They pay you to house unhoused veterans. Buy your property, fix it up. Buy your property that's probably going to be in tax lien, tax deed sale. Turn that property, flip that property, and saying you only have to have one veteran in the property for the government to fund it. So you can, but they like to fund things like that, but you only have to have a percentage of those individuals. So if you want to start a house for recovering drug addicts, the state and the government will pay you to house individuals. You can come up with a plan, kind of like the Oxford homes. If you've never heard of Oxford homes, they are flipped houses around the community or around town that help people to have places to stay after coming out of rehab. They take drug tests, things like that. So you can do that same thing with the property that you acquired through tax lien and tax deed investing, or a property that you required through other means. You know what I mean? Just from finding a house that is about to go into foreclosure, you go in and you buy that property, you buy it from the bank, or however you choose to. But I believe tax deed and tax lien investing is the easiest way. It just requires patience. But you're creating a system where money flows back to you instead of away from you. When you do this right, this becomes a foundation for generational wealth and financial control. So if you are just now tuning in, we're at the end now, but this is the House of Business podcast, and we are talking about infinite banking, building wealth through whole life insurance. Man, I hope you guys enjoyed this episode, man. We'll see you back here next Saturday, 6 p.m. Eastern Standard Time. Peace.